Institutional cash is absolutely flooding into XRP right now, and it's not slowing down one bit. Here's what blows my mind though. Barely anyone realizes why these giant institutions are actually piling into XRP. And even crazier, what's it going to take for them to eventually hit the sell button? The real story here is absolutely wild, and if you're sitting on XRP, this is music to your ears. I'm telling you, you're going to eat this up. But hang on, let me get something straight first. I have zero background in finance whatsoever. This isn't investment advice coming from me, and seriously, don't go making buy or sell decisions based on anything coming out of my mouth or keyboard. So I'm staring at this crypto news headline. 21 shares XRP ETF, a step closer to launch. Some of it, yeah, checks out. The rest, oh man, it's hilariously broken. Here's my beef with crypto media. Actually, you know what? Slapping the word media on these websites feels like a stretch. A big stretch. We're not dealing with reporters doing actual legwork here. Picture the laziest game of telephone ever. Website 1 throws something up. Website 2 glances at it, scrambles the sentences around a bit, hits publish without asking a single question. Look, if the starting point is solid, fine, whatever, no damage done. But when that first story is total nonsense getting recycled everywhere, boom, suddenly every XRP holder on the planet thinks something fake is real. And yup, we just watched that train wreck happen in real time. All right, let me cut through the garbage and show you what's legit. This part right here is actually true. For those who have been following the saga, 21 Shares XRP ETF just submitted its 5th amendment to its S1, bringing it one step closer to its potential launch this week. The issuer also decided to be slightly more wallet-friendly by lowering its management fee from 0.5% to 0.3%, a small but sweet gesture amid fierce competition. However, no word on whether they'll waive fees entirely just yet. All right, so the competition's absolutely brutal right now. Everyone's scrambling. And look, I get it. You do what you got to do. Now let's talk about 21 Shares and their XRP ETF, because spoiler alert, it's nowhere close to launching. Why is that? Well, buckle up, because we're entering fantasy territory here. They put out this whole history lesson thing, right? The ETF became auto-effective last month, but it's now waiting on a cert filing before it can officially launch. Okay, I'm going to stop you right there. That's flat out incorrect. There was no auto-effectiveness. Zero. Zilch. Here's the real story. 21 Shares pulled this move that I haven't seen anyone else do, and trust me, I've been watching this space closely. They left the delaying amendment sitting in their SEC filing. Every other company yanked theirs out. What's that mean for them? Their XRP ETF is basically locked in a cage until the SEC personally hands them the key. Why'd they go this route when literally everyone else did the opposite? Your guess is as good as mine. Radio silence from their end. This isn't some countdown timer situation where it just pops live automatically. The whole cert filing explanation, complete smokescreen. The actual roadblock is simple. The SEC hasn't approved their spot XRP ETF application. And yes, they 100% need that approval. I dug through their latest paperwork to confirm it. That's completely false. They haven't removed anything. Pure misinformation. Then we also had this. Bitwise says XRP to reshape how money moves worldwide. So listen, this is wild because those of us who've been holding XRP have been screaming this from the rooftops for more than 10 years. And now, finally, the mainstream world is waking up. The big banks, the institutional money, all these traditional finance giants are suddenly having their light bulb moment. Here's what the article says. Bitwise Asset Management has spotlighted XRP as a transformational force in global payments. In a Tuesday tweet, the firm reinforced the token's rise in institutional portfolios and its growing presence across US crypto ETFs. XRP is a crypto asset with the potential to reshape how money moves worldwide. That quote right there, straight from Bitwise's mouth. These are the same folks who literally just launched their own spot XRP ETF. And you want to know something? I completely agree with them. When it comes to moving money around, XRP is an absolute beast. No other cryptocurrency comes close to what XRP does for actual payments, and the real-world usage numbers prove it. That's where I stand on this, and apparently the institutional crowd has done their homework and reached the same conclusion. So if you pull up the SoSoValue website, they track every dollar flowing into these spot XRP ETFs since day one, which kicked off on November 13th. Here's the crazy part. We haven't seen a single red day yet. Every trading day has brought fresh money pouring in. We're sitting at $944 million in total net inflows at this point. Now, before anyone jumps down my throat, yes, I know a down day is coming eventually. I'm not delusional enough to think we're riding this green wave straight into infinity. Come on, that's just not how markets work. Obviously, reality will hit at some point. But you've got to admit, the momentum since November 13th has been absolutely bonkers. Just massive strength right out of the gates. Look at this, pure net inflows, and we're talking institutional level here. So honestly, I need you to pause for a second and really let this sink in. Seriously, we've got institutions scooping up XRP above $2 through spot ETFs, and that fundamentally rewires how this whole market operates psychologically. This isn't your typical retail FOMO situation. This is systematic mechanical capital, not emotional retail buying. And believe me, that difference is huge. These institutional players, let me be super clear here, they don't operate on feelings. They're not panic selling, they're not chasing those green candles, they're not rage quitting when things turn red. It's just not in their playbook. Who's actually buying XRP right now? We're looking at registered investment advisors, wealth management firms, ETF model portfolio managers, platform strategists, actual finance professionals. Those are the people making these moves. Those are your XRP buyers. And here's the thing about their job. You know what it isn't? It's not about trying to nail the market top. Let's be real. They're not sitting there trying to perfectly time XRP's peak. That's just not the game they play. What they actually do is allocate capital according to structured models. So what does that mean? XRP has graduated from being seen as a pure speculation play. It's now viewed as an actual portfolio component, which represents a fundamentally different lens, a different way of thinking. And the gap between how institutions operate versus your average retail trader, night and day difference, folks. You know what? This is actually brilliant for us. I'm talking really brilliant. Even if you're just a regular person speculating with whatever money you can spare, the way these giant institutions move, that's working in your favor. If you've got XRP in your wallet, pay attention because this affects you directly. Here's the wild part. These institutions are wading into the pool at $2 and up. That's their starting line. And they're not fantasizing about 20 times or 50 times returns. So what's that tell you? These heavyweight firms aren't constructing their portfolios around ridiculous gains. Look, could those happen? Absolutely. But that's not the blueprint they're working from. They're mapping out sensible multipliers that still absolutely wreck anything you'd touch in traditional finance. They're not buying scratch-off tickets. Mind you, we've both seen it happen, right? Crypto has delivered those absurd, life-altering wins before, and frankly, it could happen again tomorrow. They know that exists too, it's just not their playbook. What gets them out of bed is predictable, multi-year appreciation that survives their brutal risk committees and return frameworks. That's the institutional reality. Now here's where it gets interesting for us. Anyone on the retail side with enough patience and who loaded up when XRP was dirt cheap, you could be looking at genuine lottery money. I'm not exaggerating when I say that. That's a belief I hold firmly. There's no debate in my head about it. But flip the script to institutions, and their version of success looks completely different. Want to know what makes them pop champagne? Doubling to quadrupling their money over an entire cycle. In their world, that's already legendary performance. All right, let me beat this drum one more time because it matters. They're stepping through the door above $2. So run the numbers with me real quick. Their comfort zone ends up landing in that $5 to $8 bracket for XRP. But here's where people get confused. That's not where they bail out. This whole $5 to $8 stretch, it's not the grand finale. Think of it like a milestone marker. That's honestly the best way to picture it. It's the moment they glance at their models and say, all right, the math checks out, but the game's still live. Imagine XRP ripping from $2 straight to $6. These big players aren't scrambling to dump their bags. They're doing maintenance work on their allocation. Maybe they carve out a sliver, maybe they secure some winnings, sure thing. But the meat of their holdings, that's not going anywhere. They're not flipping coins on price swings. They're adjusting weight distribution across their entire book. That's the fundamental shift I keep hammering because people miss it. Now, could specific catalysts force their hand to sell bigger chunks? You bet. I'm not pretending they're married to this forever. I'm just pointing out a clean double or triple from a $2 entry. That doesn't rattle them enough to leave. But here's when they do move. If XRP explodes so hard it's suddenly hogging too much space in their total portfolio, yeah, they're absolutely going to carve that down. They'll take some profits, no doubt. But check this out. XRP drops, they're backing up the truck, adding more to the pile. These players move completely differently than regular retail folks would. That difference, it props up the price floor instead of triggering mass sell-offs. All right, so the potential gains from here are still really compelling. Institutional models put $5 to $8 as the base case win, hit 8 to 12. Now we're talking serious outperformance territory. 12 to 15 and climbing? That's their cycle blowout range. And just to be clear, when I mention extension, I mean price targets they'd reasonably expect, not how long it takes. Here's my bigger point though. Crypto constantly proves the doubters wrong. Things that look like fantasy, they materialize regularly. The reason is simple. Volatility mixed with a relatively small market. You don't need enormous capital inflows to spark exponential price action. Push past those ranges, pure gravy for the institutional playbook if momentum carries it there. Their core investment case doesn't depend on it, but the door stays wide open, yeah? These funds don't require $30 XRP to score big returns here. $2 to $6, the traditional finance crowd would throw a parade for those returns. Meanwhile, we're over here in crypto where coins regularly go on rocket rides, so our expectations are just calibrated differently. Grab some portfolio manager from a hedge fund though, show them that kind of multiplication in mere weeks or months, their brain would short circuit. That's legendary territory for them. Retail's playing an entirely different game right now. We're standing at the starting line of mass adoption. My honest belief, I'm totally on board with the community vibe here. XRP's real destination could dwarf what these institutional spreadsheets are mapping out. Look, I deliberately avoid throwing darts at price boards. But let's play pretend for a second. If XRP eventually cruises past $100, I'd barely raise an eyebrow. Does that scenario fit inside this particular market cycle? Not buying it for a second. But somewhere down the timeline, if those eye-watering numbers suddenly become reality, and hey, nobody's got a functioning time machine, I won't be scrambling for explanations. The retail veterans who've been dissecting XRP's infrastructure for ages, connecting dots between enterprise partnerships and actual utility, reading between the lines of regulatory shifts, we've built a mental map. Entertaining those sky-high possibilities isn't lunacy when you've genuinely absorbed what's brewing beneath the surface, even though markets love proving everyone wrong regardless. Let me paint this picture for you. The big institutional players, they don't need that as some kind of green light to keep pouring money in. What I'm trying to show you here is the framework, the actual rule book they're working with, and what triggers their buy and sell buttons. And trust me, that works in our favor. Here's why. When they do their rebalancing thing, guess what happens? Prices keep climbing over the long haul. This is the exact reason why watching institutional money is so critical. Regular investors bail when things get scary, but these big funds, they're running on autopilot. It's programmed into their system. Everyday traders dump their bags when panic hits. Big institutions scoop up shares because the spreadsheet says they have to. I'm going to repeat this. Your average investor jumps on pumps, but institutions, they're watching portfolio percentages and allocation targets. Totally separate playbook, different beast entirely, different DNA altogether. Which explains why ETF money moves like molasses, but never stops, just keeps grinding forward. And pumped up prices don't slam the brakes on money coming in. Plenty of times, winning actually pulls in more capital through index adjustments and copycat strategies. Sure, it varies depending on the market phase, but this pattern definitely plays out. It's documented, it's measurable. You've probably heard people say a million times, never buy at all-time highs. That's investor suicide. But wait, there's actually layers to this thing, and I've broken this down in other videos. I'm not going to spiral into a whole tangent here, but check this out. When you finally claw your way back to a fresh peak after being underwater forever, that's precisely when the rocket fuel kicks in. Here's what keeps happening. You smash through to uncharted territory. Could be a coin, a stock fund, an index tracker, literally anything. The second that old ceiling becomes the new floor, watch out. It goes ballistic. Hopping in right there? Yeah, surprisingly not the worst move you could make. Now sure, if you're talking about FOMOing in when the chart already looks like a ski slope pointing straight up, alright, fine, the train left the station without you. But there's shades of gray here. XRP is being labeled as financial infrastructure exposure these days. That's legitimately the angle big institutional money is taking with this. That's something XRP never genuinely enjoyed in earlier market runs in terms of its actual classification. If you're hodling XRP and scratching your head about why this should matter to you, it matters because it transforms the crash dynamics. It means corrections get scooped up instead of sparking mass exodus. It means profit taking becomes methodical instead of panic driven. It means outperformance attracts additional capital, not the reverse. That doesn't mean XRP suddenly transformed into some stable blue chip though. I need to hammer this home real quick. It hasn't. Frankly, the chaos is precisely what drew us to this space anyway. Capturing volatility is fundamentally what investing's about, period. I'm just observing that down the road, the insane price swings with XRP will gradually smooth out. This dynamic is one factor explaining why. This is XRP hitting puberty, and honestly, the whole crypto galaxy right there with it, going through the same awkward growth spurt. But listen, if you're after that unicorn moment in crypto where money actually rewrites your reality, you gotta stake your claim right now before the roller coaster flattens out into something as thrilling as watching paint dry on a municipal bond. What I'm getting at is that golden window for XRP people, it's absolutely still propped open. We're literally living through the sequel where adoption goes mainstream. It's unfolding live, and denying it at this point would be delusional. This is precisely why I sound like a broken record. The fireworks display hasn't even started yet. I'm not a financial advisor. You shouldn't pull the trigger on any buys or sells because of the stuff coming out of my mouth or keyboard. That would be a catastrophically, hilariously, monumentally boneheaded decision. All right, I'll catch you in the next video.